Metals are always a very difficult sector to call purely based on just one data point. Well, what Nilkant and his team, and I just want to bring this point out to our viewers, that Nilkant has a very deep understanding of metals, because he, in a sense, in his previous avatar was tracking the metal sector very closely. Now, the general view seems to be centered around China, which is that the Chinese consumption is going to wane off. B, the supply side, crunch which was there, that in a sense is getting that is getting solved. And on the valuation front, which is, you typically don't look at PE, you look at price to book when you want to value metal stocks, because PE is a function of cycle rather than absolute earning indication of valuations. On price to book, metal stocks are trading at a record high. And yes, indeed, metal stocks are trading at a record high. I mean, given how the metal index and especially steel stocks have outperformed, they were due for a breather. But have the structural factors changed for the uptrend in commodity? That is something where I don't think we can decisively come out with a verdict. I mean, if China is going to slow down the consumption, then you got US, which because of the new Build America program is going to be a net buyer of steel. So I think we cannot convincingly say that the best of the steel cycle is behind us. But point noted that Chinese consumption in a sense is whittling down and valuations are not exactly very favorable. So metals can see some chop and churn. The correction has already kicked in from about 10 to 15% across the board in some of the steel stocks. It could be a bit more, but I think institutional investors will not be in a hurry to write off steel completely.